Hi everyone, it's Paul Lang from DTS, and I want to introduce you to what you're about to watch. This is an hour-long presentation that was presented live to free members at Discipline Trading Strategies. It's called Top 3 Highlights, and what I did was I went back over the last year of educational videos and picked 3 topics and 3 specific areas of those presentations that I thought were very useful and could warrant further discussion, and I dove into those in more detail for a great educational event. If you like this video, visit the DTS homepage, which is Discipline Trading Strategies, and click on the free stuff page where you can get access to many other videos like this from prior educational events, Trade of the Week videos, and other educational videos about trading. For now, sit back and enjoy this video. Good evening. How is the sound tonight? If I could get a nice hello from everybody out there listening. Hello. You know how sometimes you know how sometimes I send out an email saying, wow, I'm, finished putting this together and this is one of the best ones ever, blah, blah, blah. That's not this one. I don't know. I don't like this one as much. Just never really got into it. I had the idea before the last one. This was sitting on the desktop there because I found some topics. I said, yeah, I got to get into these topics some more. And then I ended up changing topics and then I ended up changing my mind. And then I ended up getting really frustrated at some of my topics that people aren't catching on to some of the stuff. And then I got all mad. And then anyways, I finished it up. I also was frustrated today. Having a great day trading week, but today was a break-even day. I decided I would rather, on a bullish day like today, I'd rather lose money being short than break even being long, because that's what I did today. I was long, I knew to be long, and I broke even with long trades. How do you do that? It takes a special skill to do that. If you go short, hey, you just went short. I could understand that, but it was more frustrating to be sitting there long than it would have been to just been short, been wrong, and got out. So anyways, how's everybody doing tonight? You all good? All right, let's begin. Top 3 highlights. The goal of this was to take the 3 highlights, 3 topics from this year. I have so many of them, and to kind of drill down to remind you about them, and then to drill down maybe and focus some more on them. That's the goal. So I had to pick 3, and I kept changing. They weren't the original 3 I wanted to pick, and I'm not 100% sure why I changed. Here's the 3 presentations they're coming from. Tech analysis is great, evaluating some professional trading rules, and knowledge comes first. And from each of those, it's just like a section, a hit, a topic, if you will. And then I have a runner-up slide, and then I have a couple of comments. And let's get to it. And if you just logged in a couple of minutes late, I'm not going to put my stamp of approval on this as one of the great ones ever. I don't know why. Good thing to say, right? Keep expectations low. Now, what I will say is the reason I pick these, you could almost call it frustration picks. This is not like showing off picks. This is not necessarily what I think is a favorite. Most people don't think is a favorite. My favorite presentation, not what most of you likely think the favorite presentations are. What I base them on is comments I get by email and reviewing trades and working with people. And this is mostly like non-seminar people. Seminar people, for the most part, get it pretty quick. And these are just people that are, trying to make it and bouncing ideas off me and getting together to meet me once in a while. That's where I get most of my feel for the typical trader out there, if you will, and where I get some frustration sometimes. So this is where I kind of pick these up from. It's kind of the attitude, how do you still not get this? So that's what some of these are. So for some of you, you may be very, very bored. That's why I may be not as enthused about this one, but I think there'll be some good stuff. I did drill in each of these more. For the first 2, I have trade examples, and we'll pick it up from there. So tech analysis is great. There's one topic in here I'm focusing on right now, and that's the use of moving averages. I've done in a couple presentations over time, I've mentioned moving averages, or they've been in presentations, or they've been in a quiz or something like that, and I've talked about them. It says in the slide there's one good use for moving averages. You've seen my charts. My charts typically have a couple moving averages, sometimes 3, sometimes none, depending on the chart. On my platform, I don't put any moving averages on the thumbnails. There's no point of them being there. But on my main screen, I either use 2 or 3 moving averages. There's a distinct purpose for them. There's a purpose that is almost counterintuitive. It's kind of to tell you when a trend is perhaps ending. And then there's the use that 90% of new traders use them for, which is just wrong. This is where my frustration came in doing this, where I just kind of like, I don't know, maybe it was just the mood I was in yesterday, today. The concept for so many traders is still that moving averages somehow are the secret to trading. They're their support, that they're magic when they cross, whatever it is. And they justify that because they will find a trade where it worked. It's kind of just the broken clock syndrome. You know, a broken clock is right twice a day, and it's the same thing. I can find a chart that makes anything work once, but when I come back to these people and say, look, I just did what you did. I just picked the first 10 charts in this list I have, right? My three. I just went through the first 10 charts on this list, and I applied what you did, and it's still a crap. I mean, you're just finding things to justify what you think works, and you find an occasional one that works and you think it's working. And here's the bottom line, Oz, you're not making money. That's what I have to tell these people. You're not making money, right? Well, no, I'm not. Well, then how can you tell me how to trade when you're not making money and you cannot prove what you're doing is right? So let's just take a look at an example here. Here is a chart. Before I get to the per point of the slide, let's just look at the trade here. Here's a chart, and we have a rising 20 period moving average and a rising 40 period moving average, right? It's an hourly chart, a 60-minute chart. Let's come down to the 5-minute chart. We're gonna open. Does it have it on here? Yeah, we're gonna open right there, above the rising 20 and above that little prior pivot low. Here's the 5-minute chart, and we are gonna open just above that mighty magical rising 200 period moving average and just above this prior pivot low. Everybody got the setup here? So I want you to think about the use of these moving averages, how important they are. Here's the daily chart for fun. And here, you know, we had a nice breakout in the daily chart. We're well above this group of moving averages here. And we're going to open here, right at 3, right inside of that prior day's trading range. So what do these moving averages tell us, somebody? What do these moving averages tell us about the potential trade, the potential direction, and what we should be doing? Yeah, absolutely. In this case, absolutely positively nothing. If anything, I use these slides here because I like to use trades that I've just done, so I'm not just picking out stuff and making up stuff. But the reason for picking charts like this is because I get people, this is one of the common things I get, is people going long here because I'm at the rising 20. Now, the moving averages, you're a little bit wrong. The moving averages, if anything, do have some indication of what's going on here. And that is very simply, this is a day trade coming up. I'm showing you an hourly and 5-minute chart. And as a day trade, this 60-minute chart is your guide. And this is unacceptable to be long. Now, I know you can find charts for me where this trade maybe went higher. I know you can find that. You know, sometimes I walk out on my street and I find a guy who dropped his wallet there, but I don't go out on my street every night looking for somebody's wallet. It just happens once in a while. And sure they do, those high-flying, crazy stocks, but as many times they go higher, they go lower. There's no reliability. So if anything, this is telling me that this stock is a short. But the thing is, you can't use any kind of magic mathematical formula on these moving averages and say, oh, you know, the distance from here to here is X, so therefore, and the acceleration is Y. You just can't do that. It's all a visual thing. But I can't go along anything like that. So what this turns out to be, as you probably guess, is that this, here's the 5-minute chart, this is actually a short. It's a short I did Monday on PFE. Those in the room know it. And because the point of this and most everything that I teach is that nothing ever hangs on one thing. It's not that you're above the 20 or above the 200. It's a whole chart when you put it together, and price action always comes first. Moving averages are nothing but a guide to interpreting price action, all right? Not support, not resistance. People all the time argue, should it be a simple or an exponential, the 40? I get emails, why do you use the 40? You should be using the 50. OMG, none of it matters. You can use the 43 if you want to. You can use anything you want. You just want something on your chart that gives you some perspective of how fast that trend is accelerating or decelerating. So hitting the rising 20 is just completely meaningless. It doesn't. When I look at this chart, to be honest with you, like when I did this trade, I don't see these moving averages. I mean, my mind literally blocks them out. They're not there to me. I would never even, if you ask me, if you like just blindfold me all of a sudden and say, you just shorted that stock, where was the 20? I would go, I don't know, I have no idea. Because it's not relevant to the trade. Does that make sense what I'm saying, everybody? I have them on here for other purposes, right? I have them on for other purposes. But for probably 80% of the time, they just don't mean anything at all. And that's why I tell people, if you want to take them off, you can take them off. Does that make sense what I just said? That I don't even see those moving averages there? So what it comes down to, as always, is an averaging of all of the probabilities based on all of your technical skills of what you know. And for me, with that stock opening right there, which was under a little consolidation for the five, after all these little clues or things that I talk about knowing technical analysis, right? Here's a high. We made a new high, and what happened? It just instantly came in, and then we made a lower high. Well, that just tells me something. What does it tell you when that happens? We don't have to get all technical and just the language of charts, a common sense thing. It doesn't make it a trade necessarily, but what does that tell you when you have this extended move, the new high immediately retreated, and the next time you couldn't make a new high? What does that tell you? Especially after this, what does that tell you? We're running out of something. We're just running out of buyers, right? People aren't interested in the price up here. It's too high. And when you get people after a couple, there's this Tony Orlando thing. You ever heard of Tony Orlando? Knock three times. That's kind of it's not really true necessarily, knock. But the point is, you try three times up here to get higher, and now the people who are long are getting sick of it. And then you get some profit taking come, and you're gonna have profit taking. So, but it also comes down to on this particular trade. I don't think I put the 5-minute chart, did I? Yeah, on this particular trade, I didn't put the 5 in there uncovered. It just gave a great entry as well, and that's a wrong song, Chris. It just gave a great entry, which to me is part of it. And I know a lot of newer traders and even some experienced traders won't agree with this, but to me it's the Bible. I'd rather have a great entry on a so-so setup than a so-so setup on a great entry. What? I didn't say that right. I'd rather have a great entry on a so-so setup than a so-so entry on a great setup. I take that any time. And that was kind of an example of this. This wouldn't be my absolute favorite chart to short, but it was perfect in terms of the setup, the overall odds, and everything, because nothing's ever perfect. So that was a nice trade. It fell pretty quick. And by the way, I only got half of this because I'm an idiot. I mean, because I didn't get it all. I just got it from there to there. That's all I got. The other half the trade I didn't get. I got nicked out of it right at, see that green bar? I got nicked out by 4 cents, 5 cents right there. And then it fell the rest of the day, or would have been, double the day's goal. So in summary, I put this in here because it really applies to more than moving averages. It applies to all of the quick shortcut technical indicator things that we've talked about before, if you've heard me talk before. And I want to say this again. I think it's going to be mentioned on another slide, but I have yet had anybody accept my challenge. And that is simply show me the technical indicator or the piece of software that makes you money. Show it to me. I'm still waiting for anybody to do that. I've had some people send me an initial email, I think I got it. And then in the conversation, it turns out, oh, well, they're just using it to scan to find a watch list. Well, I do that too. That's fine. Scan. If you want, I'll give you a quick little shortcut scan. You want a quick little scan if you want to be lazy, which I like to be sometimes. Price over the 20 MA, any MA you want, I don't care, and the 20 over the 40. Today, well, current bar, 30 bars ago, and 60 bars ago, whether it's whatever time frame you're on. That'll get you a phenomenal list of uptrends. Out of 1,000 stocks, you probably come back with, well, it depends on the market environment, but you'll come back with 50 to 100 beautiful uptrends. And then you put them in an uptrend list and you wait for the right entries. So, I mean, you can do stuff like that, that's great, but none of those that you get are trades. All they are is answering a question you asked, which is show me price that is blah, 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 blah. And that formula happens to give you a good uptrend. 95% of the time, you'll find a decent uptrend with those. And of course, reverse it for a short. All right, I'm going to move on then. We might even finish early tonight. I'm not sure. Cover this one up. This is evaluating some professional trading rules. And it says to never do something. But I had it kind of covered up because if I say what to never do, it's going to give away the trade coming up here a little bit. So this was a fun one for me because we actually had a discussion about it in the room. So some of you will know what this is. But I think it was just a great example of these same things that we're talking about the rules that you hear when you come to trading. I always joke that you probably hear 30 or 40 different sayings when you come to trading, and I only know of 2 that are true. And one is follow the trend, which is obviously true. It's not as easy to understand as the saying would make you say. And buy the rumor, sell the news is unbelievably a very true thing that people say, and it actually is true. So here is a rule. I guess I left the rule on the slide, so I guess it doesn't matter. Never short a stock that's green on the day. You ever heard that rule, anybody? You ever heard that rule? Never short a stock that's green on the day. This is a very popular thing out there. I mean, you go to any basic trading site, only idiots would do that. And it also goes along with another rule, which is never try and short. You'll never get the top. Never short the top and never try to buy the bottom. I'll give you my comment on that in just a minute. So here is a stock that opened here. This is a 5-minute chart. It opened here and went above the prior day's high. And to fill you in on some more detail here, price closed there, right? Current price right there. And the hourly chart on this one was in an uptrend. Look at that. And we're going to open there, and it pops just above that prior pivot high on the hourly chart. Great long? Not a great long? Actually shorted? What do you think about this? You guys have to fill up the time a little bit because I'm not. I told you I'm not into this one for some reason, and I may even run short of time here. You like this short? You like it long? What should we be doing here? Give me any little signs you see. Language of charts. Just list some things on this chart that if you were to start making, you're in front of a group of people and you're got a big board and it's the left side, right side, bullish, bearish. Just give me a little, like a detective board. What do they call those? When you watch a TV show, what do they call those boards that they make for the crime scene? What do they call those? No, they don't call that a tier 1 board in a crime scene. That's not it. No, that's an hourly chart. That's an hourly chart you're looking at. It's an hourly chart. Now, we can't go anywhere until you tell me what they call those boards. That those crime detective, crime scene board. All right, fine. You guys aren't going to tell me. It's going to drive me nuts. No, not a whiteboard. No, like, in a detective show, they bring the board out and there's all the suspects and they're pointing arrows all over to evidence. And what do you guys do? I watch very little TV and you guys can't even come up with that name for me. So no clue. All right. Somebody will get it before we're done. Storyboard? Is it a storyboard? No, I think that's what you do in school. Anyways, all right. So let's continue on here. So this is an hourly chart. So well, there's no shock value here really. I mean, the shock value, you're up from here to here and you dip. That's not shock value. Timeline? No. Maybe I'm just crazy. Let me finish my thought here and then we'll get back to the important thing about what they call that board. This is where, the difference comes in between just kind of a blank look at a chart and really understanding what's going on. Did anybody notice, first of all, just a little thing? This and that and that. Anybody notice these? After 1, 2, 3, 4, 5, 6, 7 days up, rallies started to get really whacked, right? And not a whole lot of buying. You're just seeing that balance of power change a little bit. But here's the real thing. This is a 60-minute chart. As a day trade, I'm going to do like my joked around in the room the other day when my geometry teacher always did. Sometimes a couple lines is, picture's worth 1,000 words. I mean, trading's not exactly this simple. It's pretty close. Trading's not exactly that simple. But the point is, where do you go long? You go long here. You maybe go long here. I have to see the rest of the chart. You go long here, right? I'm talking just big structure of things, right? Sometimes everybody's looking at the little minutia. We're talking about gapping over a little tiny hourly chart bar. No, and then where do we think of shorting? Up in this area, up in this area, up in this area. Now, we're in an uptrend, yes, but that doesn't mean as a day trader you can't take advantage of these drops because you can't go long those drops, right? You can't go long that drop. You can't go long this drop. So when we're up here, there is no other concept for me to think big picture than to think short. Now, that doesn't mean I have to get short. But then as the morning goes on, we get a little topping tail. And again, I just found a beautiful little entry under there. If I'm able to enter, let me ask you another question. If we're up here, if I'm able to enter here, whoops, that's a little big, Paul. If I'm able to enter there, try 3. If I'm able to enter here, and I'm not so sure about the trade because maybe you don't like being over part of the hourly chart or whatever. But I give you as an argument that if it drops, that's a very likely target. Should that be part of the consideration? Should that be part of the consideration? The possible, not the possible crazy target, but the possible very, very likely target. Should that be part of the consideration? And it's an evidence board. What did you guys say? Yes, 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 yes. You'll say no, no, no. Well, sometimes, I ask what I think are common sense questions, and people think they're trick questions. No, it very much should be, because your evaluation of a trade, and this is why, the people that say, oh, you have to have a 3-to-1 reward to risk to take a trade, that's ridiculous. There's no such thing as that, because what matters is the concept. I mean, the fancy term for it is called expectancy, right? But it's a combination of how big is your target and what are the odds you're going to get there, right? If I knew for sure, if I had an 80% chance of getting a 1-to-1 target, would you take it? Or would you say, no, Paul, I need to have a 2.5-to-1 or I don't take the trade? You can come up with your 2.5 number all you want, but if the odds are 10% of getting there, what's the point even looking at it, right? So absolutely part of your consideration is, what if I said this was a flip of a coin decision? To me, it wasn't. I thought it was very high odds. But what if you thought it was a flip of a coin, but your reward to risk was 5-to-1 at a reasonable target? Would you flip a coin for 5-to-1 payout if you could flip it 10 times a day? Of course you would, right? There's nothing to even think about. So my point is, all this stuff comes into the decision-making process. But the big one to me is just conceptually, there's no concept being long up there. And again, it's not to say that it'll never go higher, but when you do, you're in a very unusual situation. So this is the odds-on bet. And this, as if you may or may not have noticed it yet, you probably didn't, I didn't show you yet. This is the market short from yesterday. This is the market. I told you sometimes I'll do the market. And I did well on this one. I took a third off on, I think at the low of the day probably. Yeah, right at the low of the prior day. And then we went into free fall mode. I don't know why we did. Maybe somebody said something. Somebody says something every day. And I did very good. I took the whole thing off right there. We did go lower, but you know what? I would never fault anybody for missing that after you get that. And the back part of that was 5-to-1. The overall thing was about 4-to-1. The rules that people say, and this is a common rule you hear: never short a stock that's green on the day. And this was in a presentation. It was presented in evaluating some professional trading rules, making fun of this one. When I did it in the presentation, I think I focused on never going long a stock that's red on the day, and gave you the explanation why. That it depends where you are in terms of the pattern, in terms of the bigger pattern, what's going on. So the other rule is, you should never try and short the high of the day. Well, what kind of an idiot would say that? I mean, how do you make money if you don't? How do you make money if you don't short the high of the day? I have a rule that I love to say that's almost the reverse of that. The most common rule in trading here is don't try and get the high of the day, don't try and get the low of the day. My rule is if you short the high of the day, you can't lose money. That doesn't apply in Florida, Eric. Come to Florida sometime, right? Think about that. I know it's just the words, but if you short the high of the day, you can't lose money. If you go long the low of the day, you can't lose money. So yeah, that's what we do. We try and find the high or low of the day. Do you know that, I'm going to make this number up for recently, but recently, I'm going to say the market has hit the high or low of the day at either the opening 5-10 minutes or at 10-10:30, 90% of the time. Does anybody even know that statistic? Like this is a common event. So if you know that and you have a pattern that says, hey, this might be the high for the day, you just jump on it. I think I used the word idiot in here, didn't I? Oh yeah, the common thing you hear spoken by idiots. It just makes no sense at all. And this isn't a matter of opinion or trading style or what you like. It's just like that diagram showed, and I'll just draw it for you real quick here. If this is your hourly chart, and this is your day break, right? Guess what? That's a great short. But when you short it, are you red or green on the day? Anybody who can follow my sloppy drawing? Are you red or green on the day? Green. But yet it's a perfect short. It's just a matter of, when we start and stop the day. It's a ridiculous concept. So there's that one. An honorable mention. This is not number 3. I was going to use one of the things on here. I was going to use actually about using the VIX intraday. And honestly, I don't know why I got frustrated. I just got, because I'm so sick of talking about some of these topics. Not to you guys, you're all great, but to some other people who continue to use them even though it's been proven they don't work. I don't understand that mentality. I understand getting tricked and thinking something works, but when it's proven to you it doesn't work and you keep using it, I just fail to see it. So I get kind of frustrated with some of these. My big thing is, very simply, my saying I like to say is that that's never made me a penny, so I don't put her on the screen. Would most of you agree with that? I'm willing to put anything on the screen, but if it doesn't make me a penny after a period of time, it's a waste of time, correct? Right? And it's worse than a waste of time, VRL. It's worse than that, because what does it become? And this is the big thing to me that drives me nuts. What does it become? You put stuff on the screen, and you say, well, I'm not really sure it works, but let's just see what it does. It's not just a waste of time, it becomes a distraction. Exactly. It becomes something now that you're looking at that you shouldn't be looking at, right? And then we get into this thing that, and nobody's going to get this word probably, but what is the word that people use is an excuse to keep all this crap on the screen? And the other question would be, that's the question, and the other question would be, why do people like to do that? What is the word? No, not FOMO. It's a word that some people think is a good word in trading. I think it's a swear word. But again, I'm a little different than some people you'd maybe hear from. People keep all this different crap on the screen for, well, sentiment is one of the things you keep on the screen, for confirmation, right? You ever hear that term, confirmation? I'm going to take a trade, blah, 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 but I want confirmation from this indicator, from the sentiment thing, from blah, 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 blah. No, I don't want confirmation. Confirmation is just distraction. Now obviously, there's a fine line where what you mean by confirmation. Obviously, there has to be a certain trade setup that that you need, and the entry, and I may use the term, confirming the entry, blah, blah, blah. But I mean to have multiple things up there to say, okay, well, after I like this trade, now I want to get confirmation from all these different things that don't matter. In other words, confirmation from things that you shouldn't even be looking at, I guess is what I'm really saying. Having them up there is just a distraction. And a lot of these are in this category, I'm sorry, using the VIX intraday is a worthless concept. You can yell at me, send me an email, swear at me, but when you do that, also prove to me it works. Because it doesn't. It's what I call the cool kids table. VWAP, show me how it made you a penny ever. It's a cool term. It's fun to say. I like saying VWAP, but it just doesn't do anything for you. Now, I used to a long time ago, some of you know me a long time, before GTS, I used to have something on my screen. It wasn't actually a technical indicator, though. It was the TRIN. Anybody heard of the TRIN? The NASDAQ TRIN? I used to have that on my screen. Now, that's not an indicator. It's new information. And the reason I stopped, anybody know why I stopped putting on my screen? Like probably 10 years ago? Take a guess why. Didn't make me a penny. Yeah, it just kind of stopped working. And I think I can understand. The NASDAQ TRIN, what it was, you have your winners and you have your winners and losers. So that if there were more money going into the losers, even the winners were more, it showed you that. But it just kind of stopped working. I think that's because of all the different instruments that came into the market. I think it started to include all the ETFs and the derivatives. I don't know what it was. I really don't care. Here's the thing. It just didn't help me anymore. So I took it off. And like any of these things that are on this list, if you can really prove to me they work, I'd be glad to look at it because I wouldn't mind something on my screen that helped me. But everything on here, everything on there should not be looked at, used, or it needs to be understood. Yeah, I just read the whole list again to myself. Shorting is, remember, shorting is risky. So There's an honorable mention slide where any one of those I probably could have taken off with the whole, redo of the whole topic, but I just couldn't get my head around doing it. So here's the third one, and the third one is more of a soft topic. Shorting is you are tired or something else, but anyways, yeah. Shorting is risky. I still hear that from people. You know why shorting is risky, right? Somebody told me their broker actually said this to them. It was probably a year ago now, but they said that a stock can only go from 50 to 0. So you're safe if you're long. You're safe because it can only go to 0. But if you're short a stock at 50, it could go to infinity. Technically true, I guess. I'm not going to worry about it. Yeah, infinity. I've seen that on the level 2 screen. One of the numbers is infinity. Yeah. And beyond, that's right. Yeah. Here's the third one, kind of a soft topic, if you will, but it's probably, this I'd have to say would get an award for being what I think is perhaps the most important topic. It's a soft topic, but probably the last topic anybody wants to hear. And this may not apply to a lot of you listening to me right now, but for a lot of people who may pick this up on the recording, maybe it will. And it's this one right here. This whole presentation focused on several things. This is great. By the way, as I was going through some of these, boy, these are some great presentations. I'm surprised they even talked about this much stuff. It's incredible. But I want to talk about this one, this whole thing, because it is probably one of the number one peeves of mine that I still get from people, that I'm almost armed when I see the email saying, I understand what I'm doing, but I'm having psychological problems. And you could be doing that. I also want to talk about the woulda, coulda, shoulda category, but you might be. I mean, obviously psych is a real issue, and it really can be. But the best way I can describe this is that psychological problems are when you can't get yourself to do what you know you have to do. Would you agree, everybody, that that's a pretty good, simple definition? Psych problems are when you just can't get yourself to do what you know you have to do. Here's the problem with, I'm going to just throw a number out there, 95% of the people I talk to. Why does that definition not apply to them? Well, if psychological problems are not being able to do what you're supposed to do, the problem with 95% of the people is they don't know the back half of that statement. They don't know what they're supposed to do. Does that make sense? So if you don't know what you're supposed to do, how can you claim psychology? Because you're just flapping in the breeze. The example I always like to give, just a human example, not trading, is if I were to give a lecture on anything about technical analysis, anything about the market, which I've done before, not at DTS. Well, I've spoken to other groups, but I have spoken in large groups before in public and live, and I have zero fear, absolutely no fear. As a matter of fact, this one time, the last time I was at a really big group was in Miami before DTS. And the big topic was, again, interest rates. What a surprise, this many years ago. It was about 10 years ago. And it was this big group in Miami, and I was one of the people talking. And the people from the group, there were two people, one before me, and they were all discussing just the rhetoric, the pre-printed, interest rates if they rally, and the market, just the same old blah 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 here on TV. And I very gutsily went up there and just said the opposite. I said, interest rates going up, so will the market. This is the time the market did go up. It just simply is not going to matter. I didn't have any fear at all. People asked me questions. I didn't care. I had no fear at all. But if I went to a friend's presentation and he was going to talk about string theory and he had to back out and gave me his notes an hour ahead of time and said, here, do this presentation, I'd be scared to death, right? I'd have big psychological issues because I don't know what I'm doing. And I wouldn't be able to handle any questions. And it's the same problem here. Like I pulled the charts from this presentation because I didn't want to do new ones. But the first part of this says, okay, somebody jumps in over the high of these two bars, calling it the infamous 1, 2, 3 pattern, the continuation pattern, right? Now, is that a good entry? Is that a bad entry? Well, the problem is that if they don't know what they're doing and they're just using that as the reason to get in, it's probably more of a FOMO thing. It's more of a fear of missing out, right? Look at this big move higher without really being respect to what's going on. So if you don't understand the chart pattern, if you don't understand that that is not the proper entry for that trade, and don't worry here about what the trade is or why it's the right or wrong entry. It would not be the right entry to get in there, right? Understanding the pattern's important, but the point simply being that is if you don't know that that's not the right entry, you blame psychology because you say, oh, I was afraid I was going to miss this, the best trade in the world. Well, what you don't know is it's not the best trade in the world. You shouldn't even be looking at this particular chart. And then when the right entry does come along, let's say you did wait, you waited for the right entry, here's the next problem. Number one scenario says here you don't have any idea where your target is. And number two scenario is you're going to go for yesterday's high. But here's what happens. We're getting in down here. And here's an entry I could probably like for this chart. And again, don't worry about what we're doing here. But there's a chart and you get in and follow what we're doing here. You get in right there. Okay, good entry. I like that. I think this is actually a trade I did down there. I don't remember. And then you run up and all of a sudden you're down here. And you gave back like, well, if you got in there, you maybe have 2.5 hours. You gave back a third of your profits all in one bar, right? And you're all frustrated. And then you look around and you say, oh man, drafts, I should have known. I was running into the high of the day, and that's what did it. But why didn't you know that that was your target? In other words, this is what people do when they don't know what they're doing. They just watch it like they're watching TV. And then after it drops, then they react to it. And they say, oh, yeah, high of the day. I guess I should have known that. I just didn't know to get out. I didn't hit the button. It just dropped all of a sudden, all these excuses come out. But why did you not know that that is where you wanted to get out in the first place? Or is that even where you wanted to get out? So drafts, I should have known that. Let's keep going here. And then you realize you're running it, and then you look around and you say, oh no, I just ran into a declining 20-period moving average on the higher time frame, as if that even mattered at all. So that becomes your excuse. Scenario number two, you're going for a bigger target. You understand that that is not necessarily your target now that you got in. Your target's going to be way up here somewhere. So you live through that pullback like you should have. And then you get this green bar come and you say, oh boy, thanks. You're up some money. You gave a third of it back. You're kind of mad, but you didn't give it back, but on paper you did. So you say, all right, thank you. I'm going to raise my stop now, right? You raise your stop and then you get knocked out. Or if you didn't get knocked out there, you got knocked out here. So now you have a small profit and you say, okay, all right, that's what it was. And then, of course, what happens is after you get knocked out, it goes on way past your target, right? But the problem is not, if you were to say to me that I had it written on paper, that this was my target, and that I was going to manage on 15-minute pivots, which just never would have broken. But I freaked out when that happened. I'd say, okay, you do have some psychological problems because you knew where to go, you knew how to manage it, and you refused to manage it in the appropriate way. But if you're sitting here watching this every tick, and you don't know where you're going, and then you get knocked out, and you say, oh, yeah, psychology, I knew it would go this high, but I just couldn't stand the thought of giving back those profits. Well, you're never going to make money doing that. And that is at the heart of, I would say, the vast majority of struggling traders, that they just really and truly don't know what they're doing to the level. Now, don't get me wrong, even when you know what you're doing, you don't really know what you're doing totally. It's always an odds game, you're never quite sure. But you have to have the conviction to say, hey, you know what? I got in here, and I know I'm getting up here, so I know I'm getting at least to here, and I'm just going to live through this stuff. I'm not even going to be here. I don't care. I'd rather get this target than get knocked out for a small gain when I got this great entry down here. Does that make sense? And this is just one example, but it applies in so many places across the board. And I think part of the frustration for a lot of people is that they just don't understand that trading is not like engineering. It's not like math. It's not like architecture where there's a formula and it works. There's a good part of art, and it's always about balancing the odds. It's like I showed you on the market short. You got to add everything up. You got to. When I teach the seminar program, sometimes I'm joking around sort of, but it's actually a good way to look at things. I'm playing like an attorney for the Bulls and an attorney for the Bears, and making my case why this thing might go higher, making my case why it may go lower. And obviously, if you make your case both ways and you're kind of stuck, you go on to the next trade. That's the great thing about stocks, is that you don't have to take that trade. You can go to the next thing. But when you start looking at the chart, you start adding it up and saying, okay, based on what I know and understand, you know what, this thing is highly likely to drop. And if it does drop, there's a heck of a target here. And that's when you take trades. And that's when then, of course, you have to manage them properly. People have a hard time digesting all that because they're always looking for the quick fix, which was one of the earlier topics I talked about this evening, etc. Questions on any of these? Or is there a topic you'd like to bring up that you think is a great highlight? You know, seriously, I'm going through some of the past presentations. When I go through it, I'm like, wow, this is really good. I forget when I do them. You know, I do them, I present them, I forget about them. Then I go back and look at them sometimes. I go, wow, this is really good stuff. Any questions on any of these? And remember, you know, some of these are on the free stuff page, and when you go back in time more than that, you have to be a platinum member to access the older ones back there. Because I said one more topic we're going to talk about that's just, you know, an ongoing topic right now. I just want to mention for those of you. No questions, anything about what we went over? Any questions about anything you're doing into right now? Like I didn't put in today's thing, but if you look at TMC, I told you I was frustrated because it was a break-even day. I had to trade those break-even early, and the TMC, I went long and stopped out, went long a second time, and just got my money back. But I exited TMC at like 2 minutes to close. If you look at the chart, I'm not going to pull it up. I'd have to pull up my camera to do that. But I knew to hung on to close because, you know, we talked about this one today. I said, if it goes, this thing's going to go. And I knew to do that. I didn't get out any time earlier. There are lots of areas I think a lot of traders would have gotten out because I really went, I went below break even for sure, hanging on to it. And then it turned out to be a 1.5 winner. But I would never have done that unless I knew to hang on to the end of the day. Now, am I always right? No. But I knew the odds were to hang on. I bet you most traders would have been out of that early from lack of knowledge. No questions, anything. Let me just hit this topic for those of you, and you're going to see this topic a few times between now and the end of the year. I apologize if you've seen it already, but I do want to take any questions on this. I keep getting questions. I sent this around by email once, and it was at the end of a prior presentation. But there is the pattern day trader rule is on the plate to be abolished, which would be a wonderful thing. I will send again, I have sent a video around where I'm discussing this for about 10 minutes. The video is 10 minutes long. It discusses why they did the rule, why I think it was one of the worst rules in history, how it hurt people tremendously. Look, if you don't know how to trade, you're going to lose money. That's a bad thing. But I think the PDT, the pattern day trader rule, made people lose money at an exceedingly fast rate. And it was the worst thing they could have done. The great thing is that for anybody who is out there that is looking to day trade that has not had the funds, you know, some people, I don't want anybody trading really that can't afford to trade, but some people, I know they're pretty well off, but all their money's in real estate, it's in longer term stuff, and pulling what you needed in the past was to pull $25,000 together to have a day trading account. A long time ago, before 2001, you didn't have to do that. And that's what is hopefully coming back by the end of the year, the fact that you will be able to day trade with the same account size that you do your long-term. And I think right now you can open a long-term account for $10, right, at Robinhood. And there'll probably be, a long time ago, while there wasn't an SEC restriction on the account size, there'll probably be broker restrictions. They don't want to mess around with you for $1,000 or something, but it'll be a reasonable amount. You'll certainly be able to day trade with $5,000. And even with $5,000, it means you can buy $20,000 worth of stock, buy it, sell it, buy it, sell it, buy it, sell it. And you still got to know what you're doing. But I think it opens the door to people. And also, to me, a big peeve of mine has been people who trade futures, not because that's the best thing to do, but because that's all they can do. In other words, right now, futures are not included in the pattern day trader rule. You're able to trade futures with a small account size. And people go and do that, and then they tell me the reasons they're doing it. Oh, it's because of liquidity. Really, it's because of liquidity. You're trading $15,000 risk, or what are you doing? I mean, there's 300 stocks you could trade $1,000 risk and not even bat an eye. So don't tell me it's liquidity, you know, and don't tell me it's leverage either. You know, the leverage of futures is immediately diminished by the volatility and the sloppiness. You find a precise stock, and you come in there, you can be just as leveraged as you need to be. So I'm not, as you know, I just did a futures trade. I'm not against futures. It's fine, but the big disadvantage to futures is that it's one chart. I'm going to keep harping on that. So for those of you that have been stuck in futures with a small account, I want you to consider when this happens is switching over to stocks because of the advantage you have of being able to look at endless variety of different charts to find the patterns, because that's how we got our edge, by finding the patterns that make sense, not by being shown to us every day, here's the market, what do you want to do with it? A lot of days I'd say, I don't know. Oh, I'm supposed to post a link in the room. I don't think I have that link handy. Where's the, oh, yeah, I do. It's on the free stuff page. Do you guys have any questions? I'm actually be done a little bit early. I'll gladly sit here and talk all you want. I told you I might be done a little bit early. I will get this link for you. And, if you see this come around and there's just no interest to you, just, delete the emails. But I am going to send this around a few times between now and end of the year, this whole topic in general. Where is, oh, I put it on the free stuff page. I'm going to put it on the home page too. Or have somebody. You guys are awful quiet. Even Vriel's kind of quiet. Well, you know what? Just go to the free stuff page. That's the fastest way to find that video, is just go to the free stuff page. And there's been 2 videos in the free stuff page. One is a little 1-minute intro video for brand new people warning about how tough it is in the market. And the other one is the pattern day trader rule, which is 10 minutes long. All right. And naturally, if you don't feel comfortable how to trade, and you're not at the moment you want to learn how to trade, well, join us in the trading room. You can follow along, and you don't have to be risking huge money. I mean, you can risk a couple $100 or $100 or whatever it is, and you're likely to make more money than you will being the greeter at Walmart or whatever you want to do to make some extra money. Usually we're focused on just a couple hours, first couple hours of the day. Even if you join us a couple days a week, get your feet in the water, learn how to do it a little bit. All right? Any questions? And I apologize for one of the bottom 10% presentations. Maybe it wasn't. Maybe you liked it. I just didn't get into it a lot this time. At least I'm honest about it. Any questions, comments? Jack's telling me to shut up. Well, Eric, send me an email and I'll try and send you instructions about what to do to fix it. All right? All right, everybody. I'm going to call it a night early tonight. Tomorrow is Thursday. Nothing going on the rest of the week in DTS land. Have a great evening, everybody. If you're in the room, I'll see you in the trading room tomorrow. If not, we'll see you at the next free event.